So good afternoon, everybody. It's now 4:32. I think what we'll do is we're going to look to start our event. We want to be as timely as possible. Our guests are all here, our panelists are here, and I know people are joining as quickly as possible. We see the numbers coming aboard, so that's fantastic. For everybody's sake, my name is Oded Orgil. I'm president of the Canada-Israel Chamber of Commerce. I want to welcome all the people who joined us. I want to thank our panelists very, very much for attending today. For those of you who don't know, the Canada-Israel Chamber of Commerce is a national not-for-profit organization, and our mandate is to promote bilateral trade between Canada and Israel. In addition to that, we look to find unique and valuable events. Unfortunately, now it's all virtual, but eventually it will be live again. For our members, bringing them timely topics, which I think this one I'm very excited about. It's very timely given everything that's going on. And to provide value for our membership. As I said, I want to thank our guests for joining. I want to thank everybody who's participating. I very much want to thank our marketing team and Lior Abramovich, who's our Managing Director of Corporate Development, who's done an amazing job again in putting this event together. I'm going to turn it over. I'm first going to introduce our moderator, and then I'm going to turn it over to him to introduce our guests and tell you how this event will move forward. So our moderator today is Michael Rapkin. Michael is the head of institutional sales and head of global partnerships at DV Chain and DVEX. He was president and founder of CICC Capital, which is an institutional over-the-counter digital asset trading platform and was acquired by DV Chain back in December of 2019. Prior to that, Michael was also a founding team member at Shorecan Digital Currency Network, which was wholly owned subsidiary of the TMX Group. It was focused on brokering Bitcoin and other OTC trades. Combining his past experience and knowledge in the financial world, Michael uses that in his present-day role in the crypto asset world and the ecosystem, and he can bridge both worlds together. Michael's also been a tremendous supporter and a friend of the Chamber, and I want to thank you, Michael, for putting this esteemed panel, and I will say esteemed panel together, and to talk about blockchain and Bitcoin indirectly today. So, Michael, over to you to introduce our guests.
Thank you for the kind words, Oded. So as Oded mentioned, my name is Michael Rapkin, and I'll be moderating this evening. I'm the head of institutional sales at DV Chain and head of global partnerships at DVEX. And just to tell you a little bit about what we do, we are one of the world's leading cryptocurrency trading platforms. We provide liquidity and market making services to institutional clients and exchanges from around the world. So firstly, on behalf of everybody who helped put this panel together, we wanted to thank you for joining us this evening. It's great that we live in a digital world where we can all come together and really share our knowledge. Over the last few months, I'm sure most of you've seen a surging interest with regards to cryptocurrencies, and you've seen headlines featuring large multinational corporations like Fidelity, BlackRock, PayPal, JP Morgan, just to name a few, allocate resources to cryptocurrencies and blockchain technology. Just this week, one of the richest men in the world, Elon Musk, founder of Tesla, said his company was going to acquire $1.5 billion worth of Bitcoin. So today, you'll hear from a panel of experts on their thoughts on what's recently occurred in the crypto markets and how it might affect us going forward and what future trends we can expect. So without further ado, I'll let everyone go ahead and introduce themselves, starting with Andrew Keagle from tokens.com.
Thanks, Michael. My background is I was an investment banker for 20 years and then caught the cryptocurrency bug back in 2017. While I was in banking, I founded a company called Hut 8, which ended up being one of the largest Bitcoin miners in North America. I left the banking world to become the CEO. While there, got the company listed on the TSX senior board. We did about 140 million in revenue, 50 million in EBITDA in the first 2 years. I've left Hut 8 last year to found a company called tokens.com, which is my current endeavor. We are a proof of stake cryptocurrency company that provides staking services to different investors. We just closed a round. We're closing our round this afternoon after this call for 25 million. So pretty happy about that.
Congrats. That's awesome, Andrew. Great to hear. So we'll kick it off to Artem from ASIC Jungle to introduce himself.
Thank you, Michael. Hello, everybody. My name is Artem Vespolov. I'm the founder and CEO of ASIC Jungle, the first and only cryptocurrency hardware resale marketplace. I have been involved in the crypto space for approximately 5 years now, soon going to be 6. My first involvement was with a company called Paychain. I was also the founder of Paychain. Paychain had started as a small company operating one Bitcoin ATM in Montreal. We quickly expanded the fleet to several machines and went on to become the largest provider of OTC transactions for Bitcoin in the whole province of Quebec. We started also doing OTC trades, and that's how I met Michael Rapkin. We grew the company to do approximately $25 to $30 million per year in transactional volume for OTC trades, which at the time was considered pretty large, given the pace at which the industry has been growing. I left Paychain about 2 years ago to get involved into the mining industry. I joined a company called Kaboomrax. I joined Kaboomrax at its infancy, which was a hardware resale group on Telegram. I spent about 12 months working in Kaboomrax, and that's what led me to found ASIC Jungle, which is basically the first automated platform for anybody looking to buy and sell hardware in bulk without having to be involved with brokers or intermediaries.
Perfect. Thanks, Artem. So we'll kick it off to George Gordiano from Balance.
Everyone, I just wanted to point out to Mike that Elon is the richest man in the world, but it seems like Andrew's closing from behind pretty fast. So congrats to Andrew on the close. Thank you, Oded and Mike, for having me here. And thanks to all of you that dialed in. I know it's not easy to make time in an afternoon for this kind of panel, so I hope we're gonna make it interesting and share some useful insight. I'm George Gordiano. I'm the co-founder and CEO of Balance. You can find us on balance.ca. And we started getting involved in the crypto space in 2017 with what initially was a retail on-ramp, which we call Balance Now. Through the process of building Balance Now, we realized that in order to get it done in such a way that it doesn't trigger any type of registration possible in the books of the securities regulators, we needed some custodial infrastructure that wasn't available at the time. So we built our custody solution. We launched it as a standalone product at the end of 2019. And we've been steadily growing since. Now, we're no Coinbase. I don't have 90 billion of assets in custody, but we do hold a few hundred million. We work with OTC desks, lenders, trading and exchange platforms, liquidity providers, market makers. We have a bank that recently started working with us. We have an ATM network that we're slowly onboarding. So business has been going good. For anyone in the room that might be thinking about pulling an Oceans 21 or a Swordfish 2 and come after us and our client organizations and assets, I'm sorry to disappoint you, but the private key material that controls the funds is managed on specialized hardware that we keep fully offline in bank-grade vaults that are effectively secured with armed guards and are under 24/7 access control and monitoring. So I'd say if you're thinking about pulling a heist, keep it simple, focus on the bank vault. If you rob the bank, there's gold, there's jewelry, there's diamonds, there's plenty of other stuff to take. So, we should be in the clear. So once more, thanks everyone for having me here and looking forward to the questions.
Thanks, George. And we can vouch for it from DV Chain's perspective. Everything George said is true. And very, very excellent platform to work with. So if you're looking for a custodian, Balance is the one. Sorry for the shameless pitch there, George, but figured I'd do it on your behalf. And last but definitely not least, Oded Orgil from Ocean Falls Blockchain.
Yeah, so thanks, Michael. So everybody, this is not the person that was supposed to be speaking on behalf of Ocean Falls. Unfortunately, my partner, Kevin Day, who's our Chief Technology Officer and really the brains behind Ocean Falls, had to deal with a personal matter at home. He's got 2 young twin daughters, and I think one was very ill, and I hope he's feeling better. I am the CEO, though, of Ocean Falls Blockchain. That's part of my day job. I've been in the financial services sector for over 25 years. But more importantly about Ocean Falls is we are a boutique Bitcoin mining operation, as well, more importantly, as a diversified blockchain technology company. We started mining in 2018 in a wonderful picturesque town in northern British Columbia. And we've continued to build that business, and now we're focused more on blockchain applications, particularly in the insurance industry with core applications looking at online the insurance marketplace, and setting up, helping individual insurance associations set up their companies and helping investors invest in them. We'll continue to expand at Ocean Falls on the mining side, and we're in the midst of a raise right now. We expect to close that next week, and we'll also look to go public in the next 3 to 5 months. Congratulations, Andrew. Their company's a little bit bigger than ours, but we're going to try to catch up to you over the next few years.
Sounds good.
Excellent. Thanks, Oded. So before we get into the panel, I'd like to let everyone know that a recorded version of the panel will be available after the call. Also, the chat is open for you to post your questions, and there will be a Q&A period at the end in which we'll be addressing all of your questions. And now let's get started. So let's get started with the first question. In 2020, there was a shift in positive sentiment towards crypto. So from your perspective, what do you think was the catalyst for that? And we'll open this discussion up for the whole panel, and we'll start with Oded, since you were last to introduce yourself.
Well, obviously, I think what you've seen is, the emergence and the maturity and the acceptance, of blockchain and Bitcoin over the last years. Bitcoin has been the catalyst. You've seen, a variety of larger institutions, such as PayPal. I think that was a real impetus in the fall of 2020, start to look to accept at Bitcoin as a source of payment. We've seen, as we said, the maturity of Bitcoin and be accepted and family offices, institutions start to recognize this as an asset class. And as the rest of this panel will be able to tell us probably better than me, is again, Bitcoin is just one example of the blockchain network and how important that is. So I think really seeing larger companies accept Bitcoin, and it's brought that to the forefront of the news media.
Excellent. Thanks, Oded. Whoever wants can take it from there, but I guess maybe we'll reverse order of how we introduced ourselves. So George, go ahead.
Yeah, I'll try to take a quick stab at this. I guess what the catalyst was in my mind for triggering this wave of adoption is the never-ending search for yield from institutional investors. If we take a look at the options that are out there, most treasury bonds are starting to get to near zero, if not into negative interest rates. High-risk stocks, like in a zero interest environment, like there's no discount on future cash flows. So, stocks been skyrocketing, but everyone knows that that's not necessarily gonna last for too long. And frankly, this is one of the asset classes, digital assets, cryptocurrencies and Bitcoin and all of those included, that does offer a bit of an escape valve for investors that are looking for yield that's more than 1%, realistically speaking, in this environment. So that's kind of what I would say the catalyst has been throughout this year.
Excellent. Thanks, George. Artem?
Yeah, well, I think the reason why Bitcoin finally had the chance to show its true colors this year was, in fact, in my opinion, due to the response of the U.S. Treasury and the United States Central Bank response to the pandemic through the monetary the monetary stimulus was, in my opinion, without any doubt, the biggest catalyst behind this bull run. I mean, look, after the next stimulus package, 1.7 or 1.9 trillion, I already get lost with all these numbers. The next stimulus package that the Biden administration is trying to pass, this will increase the total money supply in the United States by about 40%. So that would mean that almost $1 out of every $2 in circulation would have been printed over the course of the past 12 months. So if anybody thinks that that's not going to affect their purchasing power, they're wrong. People know this is wrong. Smart minds like Elon Musk, for example, they know what's happening. Wall Street knows what's happening. I mean, look, this is not rocket science. This is basic economics. This is diluting the purchasing power, and people and institutions know about this. I think gold is not really the best variant anymore because we're trying to digitize our economy. So Bitcoin is definitely ahead of the curve in everything that gold has to offer, but also is more usable, more accessible to people all across the world. And people are hedging basically the US dollar using Bitcoin. I think one of the reasons people are not using other fiat currencies to do is because this would once again simply give too much power to other economies. So people want something that doesn't necessarily allocate power to to other world governments, and something that they can hold. The people want to bank themselves. So in my opinion, yeah, the stimulus packages are the biggest reason behind the bull run.
Thank you,
If
Artem.
we may clarify something about my answer quick before we move in. So I didn't even mention cash, 100%. I agree with Artem, like that's melting away. Now, I didn't mean to take a free stab at the stock market over there, but we are in this weird situation because of all of this printing where the more debt you take on your balance sheet, the better your stock performs. So I'm not entirely sure where that's going to lead, but this is where we are today.
And Andrew, we'll open it up to you.
Yeah, I think Artem took most of what I was thinking, but I would say singularly the biggest impact to what's happened here in Bitcoin specifically is COVID. And the reason why is exactly what was said is the government response to COVID all around the world has been that of printing money. And, I always give the example of, why is a Wayne Gretzky rookie card worth more than a Michael Jordan rookie card? And it's because there's a lot more Michael Jordan rookie cards out there. And so the more of something that you have, the less valuable it becomes. And what's happening is that you have all these people who are saying, I just want to get out of fiat exposure because I don't trust the fiscal responsibility of my government. And Bitcoin is really like an apex financial predator. Like Bitcoin is really the digital representation of sound money because its inflation and its scarcity is controlled by an algorithm. And so that's why I think people are moving to it. But I would add one more thing, I think, that collided with that to lead to this really rapid rise since sort of March last year. And that's regulatory approvals and technology. So 3-4 years ago, if somebody wanted to buy Bitcoin, they actually had to figure out how to buy, open up a cold wallet and wire money to places like Coinbase or Zappo or wherever. Today, the alternatives to buying Bitcoin are so much greater and easier. You can buy Grayscale, you can buy 3IQ, Galaxy just came out with a fund. So if you look at who's buying all the Bitcoin and driving up a lot of this demand, it's Grayscale. Grayscale buys like the most demand because it's a fund that's collecting billions of dollars from people that want an easy way to get exposure, and they're going out there and buying it and storing it for people. So I really think it's kind of that combination of the response to COVID plus the ease of being able to buy this, that people are smartening up, as Artem said, and said, I don't want to hold fiat currency anymore because I can see that the value of it is going to be declining very quickly here.
Michael, can I add one thing? I think all those points are very valid. I think one thing that's very interesting still, that the total market cap, I don't know what it is today, 700 or 800 billion of Bitcoin on the global level, still relatively speaking, with all the money that's a flush out there, doesn't take a lot for it to move up that much dramatically. I mean, from a market cap perspective. So all those points are very valid. I think it's just, there's a catch up and there's an exponential growth for a certain period of time that's going to allow Bitcoin to continue to rise dramatically.
And to your point, Andrew, you kind of touched upon Bitcoin being a safe haven and possibly being a safe haven going forward. And I think a couple of the panelists here touched upon gold versus Bitcoin. So maybe you can kind of include that in the next answer that I'm going to ask the question to. So kind of given what's happened in the markets over the last few months, has the narrative of Bitcoin being a safe haven been confirmed or not yet? And if so, why? And Andrew, I'll start off with you.
Great. I don't think that it's been confirmed. I think it's in the process of being validated. If you speak to a lot of the traditionalists, they still think gold is the better safe haven. However, certainly we're seeing the attitude accelerate greatly. And part of that is coming from guys like Michael Saylor at MicroStrategy and Elon Musk, who are validating the holding of Bitcoin. But I think there's still a large transom for a lot of people to attribute value. And this is, whenever I talk to investors, they have a very hard time conceptualizing that something digital has value. It's very easy to look at a piece of gold and say, I get this. There's something here I can hold and touch. It's a lot more conceptual for a lot of people to think that there's value in something that is digital or virtual. And so I think that's going to be one of the challenges for Bitcoin. And I think the volatility is still there. I mean, we see these wild swings. And I think after we hit maybe $1 trillion or $2 trillion in value for Bitcoin, I think it's still going to be considered a relatively speculative asset that continues to attract people with a bit more of a gambling mindset. I still believe it's sound money and I love Bitcoin, But all the phone calls and emails and everything I'm getting these days is people who are just looking for a quick return as opposed to finding a safe haven for their money.
You know what, and I'll add on that just before we pass it along. So again, I've been in the space for a few years, and so Andrew, I completely hear you on fielding calls from people that want to, I guess, have a gambling mindset. But you know, now versus 3 years ago, the difference really is that these people are actually going online and looking at what is Bitcoin and why is it going up, rather than just saying, I want to buy something that's, you know, a speculative grab and watch the price go up and sell when the price starts going down. And so I think there's a little bit more education, and back to your point about COVID, you know, it's forced people to really sit down and look at the whole world and say, well, what's going on with my money? How much of it do I control? And what is kind of the next step in being able to secure it? And I'll pass it along back to Artem if you want to add anything.
Yeah, well, I think the tangible aspect of gold, and I'm not talking about futures or ETFs or anything like that, but really just holding physical gold helps, and this is my opinion, but I think it helps decrease the price volatility of gold, because if you own just, I don't know, a few ounces of gold, you have to go somewhere, you have to exchange them for money. It's a process that takes time. I understand that older investors might be more inclined to doing so, but the newer generation is definitely looking for alternatives. And I mean, Bitcoin is still a young type of asset class, so it hasn't necessarily proven itself completely yet. And it's difficult to project its future volatility. We know that Bitcoin is volatile, but at this point in time, if you bought Bitcoin a few years ago as a hedge, you're definitely not in a loss. So from that perspective, we can definitely say that for some people, it might have been a valuable hedge. But in my opinion, over time, the network effect and the law of large numbers we make so that the volatility will decrease with adoption increasing. So this should almost certainly increase Bitcoin status as a safe haven once volatility declines. And I think, you know, as Andrew said, 2 trillion, maybe, I don't know, at 10 trillion market cap is going to be more difficult for a single player or a single institution to really affect the price of Bitcoin, because we're all hoping it's going to be more distributed across the world. And that's really what Bitcoin, that's really one of the points of Bitcoin, is that it's very easily distributable. But I think for now, we can definitely assume that Bitcoin is going to be a safe haven asset in the long term. And really, given the political and geopolitical issues going around the world, I'll reinstate that there is more and more incentive for anybody to be holding Bitcoin instead of another fiat currency, especially for institutions, and giving foreign economies more power by holding, I don't know, the currency of another state. So in that sense, Bitcoin should definitely become more and more
an interesting stat, and then I'll pass it on. But in places like Venezuela and Argentina, where the government pre-COVID was printing a lot of money, like Venezuela had 1,000,000% inflation a few years ago. On a relative basis, they never saw Bitcoin actually go down. Bitcoin just went down relative to the US dollar. But if you were holding Bitcoin instead of your local currency in Venezuela or Argentina, you wouldn't have seen the declines that we witnessed in 2018.
I'll jump into the mix too with a few words, and I will try to keep it brief. One important key over here, as far as why does this virtual thing have any sort of value? I forget who made this comment online. It was someone explaining how non-fungible tokens derive their value, digital collectibles, effectively. You know, a Basquiat painting is $100 worth of paint and canvas, and 5-10 million worth of virtual value because it's made by Basquiat. So it's kind of the same idea with Bitcoin and a lot of these digital assets. And as far as is this a safe haven? Like in the medium or long term, 100%. In the short term, I guess I'm slightly less convinced than Artem is, in the sense that what I do believe that we're testing right now is see if this thing is a good store of value, not necessarily safe haven. Like if the stock market starts collapsing tomorrow, when liquidity dries out, it dries out everywhere. So, I don't think we're decorrelated just yet, and digital assets will start falling down the stock market as well. As far as, is this a good enough store of value? What's important there is, how do I know that gold is a good store of value? If I have a bar of gold, I can take out a scale and I can measure it myself and I know how much I have. If you measure it using a scale, you should arrive at the same answer. That's what's important over here as well. We can agree independently by looking at it and arriving at the same answer of how much do I have, how much do you have, whatever the whatever the absolute value of it is to be in the market. So just to sum up, I do believe we're testing the store of value hypothesis. We'll arrive at a yes. We might be testing the safe haven hypothesis, and my gut feel is it'll be a no in the short term, yes in the medium to long term.
So the only thing, again, everybody said it so well. I would just reiterate what George just talked about recently, and even Andrew, that I think Bitcoin's obviously had a phenomenal run. I think, and again, as a store of value, I think it's there and it's maturing. As a safe haven, it's still in its infancy. I mean, with this kind of volatility, you can't really call it a safe haven, as far as that goes.
Perfect. Thanks, Oded. So, largely focal point of cryptocurrencies is the price. So we're going to step away from that a little bit and focus on a couple different aspects of the sector. So pivoting over to Canada, because I think everybody on all the panelists here are headquartered in Canada. We've seen several exchanges run into trouble stemming from outright theft to wash trading. What do you believe regulators should do to make retail investors feel safe, or what have they done? And that would be for all other venues going forward. And I guess I'll pass it off. I don't know if everybody wants to answer this, but I'll start off with George on this.
What have you done, regulators? It's okay. It's like as far as the regulators respecting their mandate for investor protection in Canada, the best thing possible, in my view, would be a clear bespoke framework for trading platforms, custodians, and clearinghouses, followed by a safe harbor where you would allow the existing businesses that can't quite get into the fold just yet, potentially us, 100% most of everyone else in the market, to come in and operate, like with certain exemptive leave for a period of time until they can actually respect the platform to a T. Like we're maybe 5 to 10 regulatory decisions behind in Canada versus what's been happening in the US this year, as far as the treatment of stable coins, custodians, the treatment of digital commodities, the treatment of market makers and trading and exchange venues. It's about time. So I know the Canadian regulators wanted to take a bit more of a tailored approach and try to take bits and pieces of the existing securities and commodities regulatory framework that's out there and point out through various staff notices and through various papers which pieces of the existing regulation might apply to the existing businesses. I don't necessarily believe that that's done too much. So I would say put out a clear framework out there, but then also give a path to the businesses that will need that 6-month period, that 12-month period to be able to operate in a way that the framework outlines, to come in and do so. And in that period of time, do it under the supervision of the regulator.
Does anybody want to add anything to that? If not, I have a second part of that question for George.
Again, as a lay person, or again, obviously, I think, the reality is the traditional accounting methods and fraud prevention controls are not something, are something that the regulators are going to have to ramp up. It may not be applicable to where we're at. And I think it's really stress tested the regulators' ability to be creative and move forward. That from a bigger picture, I'll let George talk about the specifics on it. I think it allows for creativity and the marketplace to grow in that area, and hopefully the regulators will adjust and look to be creative, but it definitely stresses them. There's no doubt about that.
And so to that point, George, we can start off with you, and anybody else feel free to jump in. How will, I guess, proposed or certain regulatory changes affect the way that the retail consumer interacts with crypto?
Also, and you do understand I run a custody business, so unavoidably I will pitch my book a bit. But from my perspective, there are certain conflicts of interest. When the space emerged, the crypto businesses that are operating were doing everything plus the kitchen sink. Custody and trading and lending and borrowing, and there was a venture arm as well, and all of those under one umbrella. Obviously, that brings about a few conflicts of interest that need to be resolved by splitting roles and responsibilities across various types of ecosystem participants. The simplest one is if you run a trading platform, you probably shouldn't be holding custody of the client's assets. Because if you do so and if you balloon a little bit too much, and then maybe the trading platform runs into some trouble, or maybe they start becoming illiquid, or their creditor starts coming in, they might be very tempted to start dipping into the investors' assets, be able to run their operations, which happened in the case of Quadriga CX, potentially in the case of Einstein. I'm not entirely sure how that was litigated and what was the end conclusion. But so from my point of view, this split of custody sits in one place, the trading and exchange operations with a separate entity body, like in and of its own right, this is a no-brainer to me. So that's one. The second is, I would say, for the trading and exchange operating platforms per se, either work through model. When I know this might sound nuts because it's the equivalent of saying, let's get the retail client to an account at the DTCC, like if we were to make an analogy. But I'd say try to pass the legal title to the client themselves on the assets. Like it's a lot easier to take delivery of these assets on chain. Like we don't need to move like a dematerialized stock certificate in a database, or we don't need to move like a barrel of oil from one warehouse to another. So there is a universe in which we could actually pass the title and full ownership to the retail client, and then all the trading platform does is mix and match orders and effectively facilitate the trading operation, which is the core business function that they deal with. So either do that, or as a regulator, look into the trading platforms, the ones that keep the title on the assets to themselves rather than giving it to the clients. Most likely there's some form of security behind the scenes there where, like they're effectively making a promise and saying, okay, if you come over and ask us for this Bitcoin, we'll give it to you, but legally it's ours while it sits on the exchange. So make the assets on the exchange belong to the retail user one way or another.
Does anybody want to add anything to that?
Again, only from a high level, I would say that, again, when the regulators get more involved, there's the pros of probably the ability to move in and out from crypto to regulations, more transparency because there are tax consequences, but it changes the concept of Bitcoin and doesn't become as pure as what the initial thought was of the anonymity. So I think, on the one hand, you're going to see when it's out, when the regulators get more involved, more people become aware of it, and there's an ability for it to become more mainstream.
And to that point, exactly that, right? So, what Bitcoin was is maybe not what Bitcoin is today. And if we wanted it to go mainstream, which a lot of us did, then we had to work with regulators. We had to work with large financial institutions, because that's the way to the path. That's the path to success, right? We can't just have people running around and doing whatever they want, because at the end of the day, we're still transacting currency, and around currency, there's regulatory laws. And so to that question, I have another one. So if a retail consumer is to go out and buy Bitcoin or any other cryptocurrency, but doesn't want to be responsible for holding their own crypto, what are some vehicles out there that can still give them exposure to this asset class? And I can start off with, I guess, Andrew.
Sure. I think that the best vehicle I know of, and I use myself, is the 3IQ Bitcoin Fund. They have one denominated in Canadian dollars and they have one denominated in US dollars. It's pretty simple. You can call up your advisor and trade it. There's a couple of other ones out there, the Grayscale in the United States. One of the nice features about the one at 3IQ is you can put it into your RRSP. I think that is unique to that product. So that's the one I would use if I'm not buying my Bitcoin directly.
Anybody else want to add anything to that? And
yeah,
I hope Fred Pye was on this call. So
I was just gonna, yeah, Fred, there's a shout out for you from Andrew. Yeah, that's I mean, obviously, I think that, there are a number of ETFs or again, some funds. I mean, Fred's got a wonderful fund with 3IQ. I think that's great. I mean, obviously by proxy, whether people want to indirectly, there's a number of publicly traded, Bitcoin mining operations. We won't give a shout out to any particular one. Andrew comes from a previous one, so congrats. But there's a number of different companies out there that people can do, whether it's funds, again, or owning these publicly traded companies.
For sure, and to add to that, so I guess I can name it. There's no NDA. Everybody can just Google Andrew Keagle and see where he worked before. So Andrew worked.
I do think that people, though, there's a certain, ease of use. Like the reason I like the funds and the 3IQ fund is it's just easy if you can call up your broker, like where people often stumble on, and this was back going to why I was saying, COVID plus a combination of the accessibility to buy it now through these funds led to this large increase. People just like the ease of being able to do it that way instead of having to open an account at Coinbase. I think that'll eventually shift. And I bet you in 3 years, you'll be able to call up your broker at Scotiabank or RBC or CIBC and say, you know what, pick up 2 Bitcoin for me and half an ETH, and they'll be able to buy it for you and store it. I really believe that's coming. And Wealthsimple is interesting. Wealthsimple offers a product that gives you exposure to Bitcoin and Ethereum. It's not quite ownership, but it gives you that exposure. I heard they opened up 200,000 new accounts within like 2 months of providing that service last year. Just think about that, 200,000 new accounts. The first bank in Canada that provides the ability to store and buy and sell Bitcoin, they're gonna see a massive tsunami of people coming in to open up accounts.
I saw the headline. I gotta buy that Globe and Mail subscription because I didn't pay for the rest of the article.
But to that point, Andrew's absolutely right. I mean, you're going to see that evolution. And that goes back to your previous question, Michael, about the regulators. I mean, we're going to get more transparency. We're going to get more ease of use in a variety of different vehicles. But with that, again, is that evolution of Bitcoin per se, that it's no longer what it was in its pure form from 2008. But that's the maturing of these vehicles. So, and again, I think people will start to look at when they're making investments, are they, as they mature and as they learn about this, and as advisors learn about this, are they buying Bitcoin? Are they buying Ethereum? Are they buying a company? Again, whether it's such as Andrew who's going public or ours is going public, we're more of a blockchain company. We have a Bitcoin mining aspect to us. Andrew is looking, at proof of stake as opposed to proof of work. They're different things. I mean, that it's a whole different segment, which makes it very exciting. But there's a learning curve for investors and advisors as we go through this process, never mind the regulators.
So you guys touched upon banks there. We all obviously know on this, all the panelists on this call know that banks have an active interest in crypto. What are some more of the likely products that you can expect them to roll out, let's say over the next 24 months with regards to crypto, and how will they compete with what's currently out in the market today?
I'll take 15 seconds on this. So from what I've kind of seen around is they're still regarded as very high brand risk for them. So most likely they're gonna look at it as this is an interesting, like type of asset or product for the retail millennials, Gen Z kind of folks. So let's try to come out with products like 1 or 2 logos away through some venture fund of sorts instead of retooling their internal architecture behind the scenes. Frankly, I believe that's going to be the undoing of a lot of these banks, but that's what I've seen so far.
Again, I think the banks they're going to get involved in this on a number of different aspects. Everything from where Jamie Dimon, I can't recall the exact terminology that he used about what Bitcoin was 3 years ago, to possibly setting up a trading desk, to eventually having their own proprietary products in one form or another on the variety of different manners that Andrew talked about, or George or Artem. There will be a desk. I think the banks are moving slowly, and understandably why, as again, we talk with the regulators and all the things. The banks are going to be involved in this. The banks are in the business to make money, and they'll find a way, to work that, whether it's through their desks, through an asset management group or the like, to participate in this.
Yeah, banks are.
Sorry, go ahead, Artem.
Yeah, banks are large institutions. Everybody knows they're very conservative. They take time to take a decision. But really, at the end of the day, the question is, what would you expect? What would you want the bank to offer you if you want to get into crypto? It's fairly easy to buy Bitcoin and hold it yourself, or just buy if you want to transact with a larger amount to use an OTC desk. I think really what banks can offer is very limited in terms of moving the idea and the vision of cryptocurrency forward. And this is my opinion. Once again, I come from a sort of a libertarian point of view with everything in regards to Bitcoin, but I think there's already so many tools accessible for customers and for retail that whatever banks are going to be adding in the coming months or years is not necessarily going to be the biggest driving force behind crypto adoption.
For sure. And it not necessarily the biggest driving force, but from a perspective of them rolling out products, they always have very high participation rates across the board. And so with regards to it being an actual driver of price or an actual driver of, I guess, leave it a price, it could be a driver of adoption. But to that point, Artem, maybe I'll start you off with this question to your libertarian mindset about central bank digital currencies. So how will this affect the future landscape of stable coins once CBDCs are issued? And at what point could you see government intervention and right now to any sort of stable coin?
Well, first of all, in my opinion, a CBDC does not necessarily share the same values that a public blockchain would bring, which is network security, transparency, and especially immutability. So in that sense, CBDCs are not necessarily intended to be decentralized, which would mean that they, in my opinion, they wouldn't necessarily bring a use case that would be for the retail customer, for example, much different from using a debit or a credit card, maybe except for the speed of transaction. On a larger scale, maybe on an enterprise scale, obviously people will be able to interact cross-border on a 24/7 basis like we're doing now with Bitcoin, but with a central bank digital currency, a national stable coin would be maybe a little bit easier for businesses to do those sorts of transactions. But really, in my opinion, we have to be careful with what we think of CBDCs, especially because there's certain privacy issues that are worth being discussed. So since these blockchains wouldn't be decentralized, it would be controlled by a few or maybe even only one party, this would potentially open the way for a network validator to refuse transactions coming from certain wallets, which would potentially create some sort of financial censorship if there was a reason to do so. And really, I think we have to meditate a little bit about the negative and the positive impact of that on our financial freedoms. Let's put it that way. And thinking about it, a CBDC would not necessarily be capped like Bitcoin is. So definitely, obviously, stablecoins are not capped, but if we compare it to Bitcoin, they would obviously not be a deflationary sort of a currency. So definitely, I wouldn't see a central bank issuing a capped coin, because I think the energy that it would take to switch from an inflationary economy to a deflationary one, especially in a post-COVID world where we need some sort of stimulus to accelerate growth, would be a little bit hard to imagine. But yeah, I think in terms of CBDCs, really more attention has to be paid to the potential surveillance policies and the restrictions on financial freedoms that could happen. And from, as you said, Michael, from a libertarian point of view, that's what my opinion is.
So before anybody else answers, I'll just maybe add in a little tidbit here. I guess for the panelists, CBDCs do pose a sovereign threat, and it's been stated by many governments. And so as governments are actually going forward and trying to build out, CBDCs, how does this affect existing stablecoin projects? And then you can even add on, is there an actual sovereign risk? Do you agree with that?
May I jump into the mix?
Go ahead, George.
I do need to give a quick TLDR on this. I don't know, there's this, not to take it biblical, but there's this thing called the parable of the weeds. And it kind of goes like this. An owner had a field, he planted some wheat. Overnight, someone else came in and planted some weeds. When the owner woke up in the morning, he found all of his workers in the field overzealously taking out the weeds. And his answer was, calm down, take it easy. If you take out all the weeds right now, you're gonna damage the roots of the wheat. So we're not gonna have a harvest. Let's wait until harvest time. When that's done, we're gonna pull the wheat and the weeds together, sort, take all of the weeds in one stack and throw it into a fire, and that's that. So, I'm not sure how popular this view will be, but what's happening right now is that on an international level, nation states can't really quite agree on who has what, because no one necessarily wants to disclose how fast they've been running the printer. So there's an incentive to move to the blockchain, like a blockchain-based settlement layer that would operate, similar to what the BIC or SWIFT currently does. Now, you'd be tempted to take a look at what's been happening in the US this year and to say, hey, look, here's a string of favorable decisions where the regulator is now legitimizing stablecoins, right? Like, hey, we're gonna allow banks to custody, provide services to stablecoin issuers. And, here's an interpretation letter from the CICC FinHub staff that outlines that you can actually build and structure a stablecoin in such a way that does not create a security behind the scenes, right? So it'd be very tempted to say that the regulators are legitimizing stablecoins. What I believe the final picture will be is when that day of harvest comes and a central bank says, we're ready with our CBDC solution, they'll just turn around to the rest of the stablecoin issuers and say, ours is legal tender because it's issued by the government, yours isn't, therefore it's not currency. There's only one sovereign, it's us. We reserve the right to seigniorage, shut that down. Like, what else are you gonna do? Like, want to set up your own court of law? Do you want to issue IDs? Like, what's next if we're gonna let you do currency? Right? So this is how I believe it would unfold. So if I were to operate a stable coin today, I would see it as an intermediary step until that final picture. So I try to capitalize on moving as much fiat into crypto as possible and make the bank while it's happening, expand the business away from it. So I have something like when that gets shut down. And obviously you're going to have like the odd contenders here and there that will say, like, look, our reserves are with Deltec in the Bahamas and come get us and this and that, which will be a very interesting show to watch. But this is where I see the final picture eventually unfolding. Once CDBCs are live, they'll be called legal tender. Everything else will be discarded away.
Anybody else want to add to that? So George, I guess just to round up your answer, I agree with everything you said and I have nothing to add to it. We've had so many conversations about that. So I think you hit the nail with the hammer. So we'll round up the panel right now, just to open it up to Q&A. I see we've gotten a bunch of questions here. So firstly, I want to thank everybody who was on the panel. So thank you, Oded, George, Andrew, Artem. You guys did a great job today. If you're looking to schedule a call with any of the panelists, please feel free to reach out to us directly. Our contact information should be sent along with the recording after the call. Quick thank you to CICC, especially Lior and Oded. You guys put together this panel, put together the infrastructure for it, spent hours doing it. Oded, you have about 150 jobs and 17 children. I don't know how you do all that, but kudos to you. And, we've all been separated from so long from one another, and panels like this are really great for us to kind of share our knowledge with one another and really come together and have a couple jokes and share some value. So without further ado, we'll open it up to some questions. Actually, before that, Oded, did you want to maybe say a few words before we open it up to questions?
Michael, you know me well enough. I always like to say something. So again, just on behalf of the chamber, I really want to thank you, all the panelists, guys. It was great. It's our pleasure as the chamber to continue to try to host these sort of events. I am going to put one quick plug in for those of you on. We've got another wonderful event coming up next week where we're going to have, again, an esteemed panel. One of the top securities lawyers in Canada, Jason Saltzman from Gowlings, the senior partner at MNP on companies going public, and Mark Francis from the Canadian Securities Exchange talking about ways that companies can go public. And yeah, Andrew, you don't have to listen because you're doing it your own way. We're doing it our way, but for a lot of companies. So we hope that'll be a great event. There'll be an email out going to everybody, but that's really it. So thank you for participating. I'm sorry Kevin couldn't be here. He would have been far better than me, but Michael as well, thank you. Let's turn over. Let's see if there's some questions that we can answer.
Awesome. So we have a couple of questions here. I'll open it up to the panel. Whoever wants can take it and feel free to join in. So what new challenges and opportunities do you think will arise from the growth of DeFi?
I can grab that one. In my new company, tokens.com, that's focused on staking and proof of stake, the capacity to put transactions through is multiples higher than before. So, the statistics that I've seen is on the current proof of work for Ethereum and Bitcoin, you can do about 15 transactions per second. Visa, the credit card, does about 20,000 transactions per second. But once Ethereum finishes its transition to proof of stake, it's going to be able to do 100,000 transactions per second. So that's a massive leap from 15. And as a result of that, you're going to get a lot more throughput and ability to create things on DeFi, decentralized finance for the audience, which is financial applications built on the blockchain that don't require banks to be involved. So that could be lending, borrowing, and trading are the three big ones. So I think that's going to be a massive area over the course of the next 36 months that people should be keeping an eye on. And the best way that I would say to invest in those is to invest in the building blocks of DeFi, which are the layer 1 protocols like Ethereum 2.0.
Anybody else want to add to that?
No, I think Andrew said it very well.
Excellent. All right, so next question we have here. Give me 1 second, gentlemen. What impact do you think the current SEC lawsuit against Ripple will have on the whole crypto sector? Also, this is part of the same question. Also, how will either outcome, i.e. security or not, impact the work that each of your businesses are striving for?
I can start. I mean, again, I think the reality is we are in, blockchain and crypto is in its infancy. We're going to continually see, the definition and the redefinition of it as a security, as an asset. I think it's healthy in the longer term, as we continue to find and work through that process. And I don't think it's going to have a long-term effect. In the short term, there are blips and bubbles, and we've talked about the volatility of Bitcoin and blockchain and the whole sector. But in our personal business, it doesn't really affect it, and I think over the long term, it really doesn't have an effect. It's part of the maturation of the sector.
I'll jump into the mix as well. So, look, Ripple is something that we've supported for our custody services, and way back when we used to also do buy sell on it. I am obviously watching that SEC lawsuit very, very carefully with our general counsel, with the securities lawyers, and trying to see how it will unfold. In our case, like, we've already had the preliminary conversations with our clients to effectively pull the plug on it, like if the lawsuit takes a direction that doesn't make sense. Now, here's my view on it. In today's incarnation of Ripple, it's no different than where Ethereum is. As far as decentralization, as far as who's running the nodes, how does the thing behave? Now, the regulators, at least in the United States, in Canada, no regulators taking on any official position on any asset outside of Bitcoin and Ether, which they've called digital commodities, and that's about it. So there's no further clarity in Canada on this, but I am talking about ES specifically. Now, in the US, the SEC took this viewpoint a little while back of what's called, like, they introduced what's called the Securities Clarity Act, which is currently proposed bill in Congress, that basically says this: look, you could have such a thing as a digital commodity that nonetheless is sold pursuant to an investment contract to the market, which constitutes a securities transaction, which obviously needs to be done in a regulated fashion, either with registration or pursuant some registration exemption if there is one available for the type of activity. This is how it seems to me that they're trying to clarify the picture. And to give you a practical example, the argument would be, look, in 2014, when Ethereum did their initial coin offering, Ethereum itself, the ETH, was a digital commodity, but nonetheless, the ICO was a sale of securities, which maybe should have been regulated, maybe some statute of limitations expired, who knows what will happen then. It's very likely, in my view, that the Ripple lawsuit will end in the same end picture, which is Ripple itself is a digital commodity, but nonetheless, there has been an unregistered sale of securities that the defendants, the executives and everyone else around have been doing since the beginning of time. And that one has to be prosecuted, enforced, brought to its full conclusion. It's either this, or the alternative is we're back in that universe of, can commodities change into securities back and forth depending on whatever vague definition of meaningful decentralization would mean? And then we have to look into, can we even devise such a test to figure out at what point does the digital commodity change into digital security and back? So I think that picture of the world is a lot more vague, a lot harder to regulate, a lot harder to understand for the market participants, which is why the Securities Clarity Act got proposed in the first place. So this is kind of, today I see more business risk on supporting Ripple in the sense of reduced liquidity, reduced access to markets as far as where it's listed rather than regulatory risk. If the regulatory risk is to increase, we're ready to pull the plug on it on our end whenever it makes sense.
And to that point, George, at DV Chain, you know, we're in the exact same mindset as that. So, you know, if there's regulatory risk that increases around Ripple, you know, we would pull it from our platform. At this moment, we're offering Ripple. It's not labeled as security yet. And so we've decided to actually leave it open for our clients to be able to buy and sell and trade it. But again, as soon as any sort of additional regulatory risk comes around it, a company like ours would essentially just drop it and move on. And so sorry to take that away from anybody else, if anybody else wanted to add any commentary there. All right, so next question. I'm assuming this is probably going to be for George and Artem, but let's see who can answer this. So is deep packet inspection a risk to crypto slash Bitcoin? Couldn't the cable companies just throttle the protocol and slow down networks or block them entirely?
This is a tough one. Honestly, it's a good question. I think, well, my first question that arises in regards to this is, what incentive would the cable companies have to slow down the networks? But let's say there was an incentive. Look, I'm definitely not a coder myself, but maybe using things such as bridges, for example, would allow you to sort of circumvent any sort of deep package inspections. That's really the only thing that comes to my mind.
I'll throw one into the mix. So yes, it's a risk. Nonetheless, there is such a thing as VPNs in private networks. And end of the day, we can do this over radio waves and with pen and paper if we absolutely need to, as far as generating blocks and continuing the network forward. You know, like if you'd have to defend net neutrality first, like obliterate that and say VPNs are illegal and everyone is working with a you know, like firewalled China style, you know, like internal internet in their own nation state, and then maybe that would be a possibility, but I don't see that happening anytime soon.
Anybody else want to add to that? Oh. All right, so last question we have here, and again, guys, if you have any more questions, feel free to send them through. Now's the time. I'll open this one up to Andrew, and Artem, I'll let you kind of take the back end of it. So what do you think will be the impact of the hardware market supply crunch on the industry?
So in terms of being a crypto miner, what the question is referring to is the fact that it's hard to get mining equipment right now. So the impact is, number one, if you raise a lot of money now or you have money to deploy into Bitcoin mining, you're probably going to have to wait 6 to 9 months to get good equipment, unless you go to ASIC Jungle and see what is available there. But I think what you will see is that the price of the equipment will go up. So one of the interesting things about Bitcoin mining equipment is it's not like buying a cell phone where you go in and it's, you know, it's approximately $1,000 regardless of the demand. Bitcoin mining equipment fluctuates with the price of Bitcoin. It's really cheap to buy when Bitcoin's at $3,000. It's really expensive to buy when Bitcoin's at $45,000. So you're going to see further delays and a lot of money going in and whacking in. So I think it'll affect the margins down the road for the miners.
Yeah, and really I was reading an article this morning, the semiconductor industry has been really affected by the supply chain has been really affected by the pandemic, and with companies giants such as Apple just taking up all the supply, doesn't really leave much room for smaller industry players. I mean, what is the size of the Bitcoin mining industry in terms of manufacturing? Just maybe a couple $2 billion a year. So it doesn't leave too much room for miners to be producing enough chips for ASICs for hardware for miners. So everything is in backlog right now. If you want to buy anything new, NS19 or Watts miners, whatever you want, nobody's delivering until 2022. So what's happening now is given the increase in the price of Bitcoin, we have seen older generation hardware such as the S9 models and like really the old stuff that wasn't even profitable just a few months ago. really skyrocketing prices. I mean, if you want to make an investment a year ago, don't even buy Bitcoin, go buy some S9 machines. S9s were selling for like 20 bucks. I bought some at 15 myself, I think in May or June last year. I mean, they're selling for 250 in the retail markets now per unit, and this is on a bulk basis. I mean, if you want to sell them by the unit, they're hard to find. You have companies such as Bitfarms, Hut8 that have just raised a bunch of capital, and they're, I assume, trying to buy some of the new generation hardware. It's impossible to find, and really the cost of those machines has really been affected by that. And the general effect on the industry, I mean, that's the effect on the mining industry. What would be the effect on Bitcoin itself? I mean, look, I think Bitcoin will still keep getting secured by miners, and miners will keep mining as long as the economics make sense. So in that sense, yeah, there's definitely a shortage, and from what we can see is that it's not ending anytime soon.
I guess the only thing I'd add, and everyone said it, it's really this is the marketplace working. I mean, the price of Bitcoin goes up, and as Andrew said, I mean, there's an oligopoly out there. There's a limited amount. Price of the machines go up, and again, inevitably that'll come down over time. I think as Bitcoin and mining industry matures, you'll see other suppliers come into the industry. There is talk about all that, and there'll be an equilibrium that reaches itself at some point.
Excellent, gentlemen. I don't think we have any more questions here, so we'll conclude the panel for the evening. Thank you, everybody, for joining us, and thank you, panelists, for participating. Thank you for your time.
Thank you.
Thank you, Michael.
Bye-bye.